Hey, what's up, guys? Sam here, and I'll be doing the premium video for Friday, January 24th, 2025. So there's still about 90 minutes to go before the market closes, but overall, I don't think it'll change too much of what we're going to be looking at in this video. So let's go ahead and dive in, and we're going to cover the indexes, we'll cover bonds. I'm going to touch on crypto in this video just a little bit, and then I'm actually going to have a separate crypto video specifically just for that. And then we'll cover what's going on into next week. So let's start here where we usually start, which is going to be SPY. And SPY Weekly. SPY Weekly has regained its thrust signal. This is actually very similar signal to what it was back here, where you had down signals and then followed by an up signal. And very similar to what you had here actually as well, where you had a down signal followed immediately up by an up signal within 1 to 2 bars. And what that has a tendency to do is kind of launch the thing higher. And the question is, will this one do the same thing as the ones before? And at least so far, I don't have much reason to doubt it. We're going to come back to that, though, because there's actually something here that I do need to show you on SPY that you can't currently see. So the daily chart has improved nominally. Again, the daily chart is just neutral, so despite the fact that it's gapped up pretty much almost every day this week, torturing bears and put holders across the world, the actual score for the SPY is actually still neutral. And that's not the worst thing in the world. It does say that it's not in trend at the moment. So absolutely require this indicator to have strong thrust, which it does. So we'll see if that's enough to kind of fix things and go higher from there. There's also a multi-day squeeze on the ES up to a 3-day. So there is actual juice here to continue to try to go higher. And every time that we've gotten, one of these judo signals, which is a down signal followed within 1 to 2 bars by an up signal, you've gone up and hit 3 ATR weekly, right? So if that is the case, 3 ATR weekly is way up here. So aside from that, more of the same. We kind of touched on all of this last week, and just continuing to see more of the same. Now I'm going to bring up my drawings here. And I want to draw your attention to this zone right here, right between 609 to about 611.85. And just so you're aware, there's like a really, really big long-term target from these levels. So in order to get these targets, you actually have to go back and measure all the way from COVID. And if you measure the COVID high, and you can do this on your own, if you measure the COVID high to the COVID low, the 611.85 level is a 200% retracement of that. If you then use, instead of a retracement, you use an extension, that comes in at basically 610. So the purple lines are the most important lines on the chart. They're the most long-term lines as well. And you can see that, back here basically was your low, and here, give or take a day, it was your low. That was the lower purple line. Back here, the purple line was basically your high. Now, again, I'm not just pointing to these because they're recent levels. These are actually COVID measurements. So you can figure that on your own and see for yourself. But this is a very, very big level going into next week. So here's kind of the way that I'm looking at things. Either next week sets up the blow-offiest, melt-uppingest top ever, which would be good for the bulls, or it sets up a rug pull of epic proportions brought to you by the Fed and Mr. Powell. And it's tough to say which one it is. At least for now, I would have to rely on this indicator here and say that the blow off top with a melt up is very likely. But I'm also going into it fully respecting this zone here from about 609 to 612 on SPY as just a major really long-term target. That target is 4 years in the making, right? All the way back to 2019, 2020. So I got to respect that level as it sits, but going into it, it all looks pretty good. We've seen better scores. I do want to be very clear about that. We've seen much better scores on the daily charts than just a neutral 17. But the conditions are ripe for a blow off top as well. So neither outcome would really surprise me all that much going into next week. Whether it is a blow off top or whether it is a rug pull. And frankly, we actually could see a little bit of both. We could see an initial rug pull, what appears to be a rug pull precipitated by the Fed, and then a continuation of the rally if it catches. Right, we are pretty extended here, so we certainly could use something that gives us a pullback into some support levels. So then if we go here to the Qs, the Qs are in similar shape. They have a lot of room to their 3 ATR as well, both on the daily and the weekly. Right, last time that it came into 3 ATR on the daily, you had a pretty good pullback. 3 ATR to the daily, you had a pretty good pullback. And now your 3 ATR is way up here somewhere. The scores here on the daily chart are better. Right, this one's actually a bull plus, unlike SPY. But on the weekly chart, we don't actually have our turn signal here quite just yet. So maybe a little bit push and pull there. I still think that tech is the place to be. I've shown you guys in the room the Mag 7 index, and that has a daily squeeze, a 2-day squeeze, and a 3-day squeeze. In fact, we probably should look at it. So let's see if I can find that, because the compression found in the Mag 7 index is quite something. So let's plug that in. And so for those of you that are unfamiliar, the Mag 7 index is just an index of the 10 biggest, most important companies. Although I might be kicking out Home Depot next week. And so what you can't see here is that there's actually a 3-day and a 2-day squeeze underneath this guy. What you can see here is that there's a daily slingshot squeeze, meaning it went negative, squeeze, 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 it goes negative, rounds out, yellow histograms, rounds out, and then has the potential to fire in the opposite direction from where it started, so from down to up, slingshot squeeze. And you'll also have a very cleanly defined top here, right? So you have a very cleanly defined trading range. And in the event that you take off the top here, this is going to be moving and grooving pretty strongly, I would imagine, to the upside. So do we have the catalyst for it? Yeah, we're going into big tech earnings. If Powell is nice next week, which I can't guarantee he will be, but if he is nice, plus tech earnings, that sets the stage for this to break out. And this would imply about 7-ish%, a little over 7% move in the NASDAQ. So you can play that through the QQQ, you can play that through Google, Amazon, Microsoft, take your pick. The safest bet is just to bet on the field and go with QQQ. So this chart heavily is influencing what I'm thinking in terms of a potential for a blow off top, because you have a slingshot squeeze, a clearly defined trading range, and this is the 10 most important companies in the market right now. So that all bodes quite well. Let's go to the DIA. We won't spend as much time here on the DIA and the Russell. I just want to touch base on these. So generically good. I don't see anything here that's overwhelmingly great. So we'll just move on. Everything that we talked about on the SPY and the Qs basically applies to the DIA. I have less interest in trading the DIA than I do the NASDAQ, just because of the signal that I just finished showing you, which is the Mag 7. And then, of course, the Russell. And the Russell is going to be the one that I have the least amount of interest in trading. It's also going to be the squeeziest one, meaning that you can have giant moves here. But there's so few things that I look at that tie back into the Russell that I'm just not overly wanting to trade it. You can see the scores here for yourself. If you decide to trade it, I wouldn't blame you, but it's not going to be for me. I'm looking for things that have good levels of correlation back to that Mag 7 index. And mostly it's going to be the QQQ that correlates well with that, with a little bit of a SPY as well. IWM would probably correlate the least of all of them. Let's go to the bond world here, and we're going to go look at bonds again. We could look at interest rates, but I think interest rates are not as important for what we're trying to do as HYG, which is junk bonds. And big improvement here in junk bonds. You've gotten back above this critical level here, 79.5. Mostly, I just look at this. I don't need to do kind of a super deep breakdown on this. Mostly, I'm just looking at this to see if this is more sided towards the bulls or the bears. Right now, one bit of homework that I can leave on your plate is if you want to look at something like ZN or ZB or ZT, compare those charts to HYG and notice how much better HYG looks than all of the ones we just mentioned. So because of that, that is a bullish signal unto itself. Essentially, if you're not familiar with this, if junk bonds, HYG, look significantly better than government bonds, that is a positive signal for risk appetite. And that's essentially what we're doing, right? We don't actually want to trade HYG, or at least I don't. I'm just looking to see if there's issues with risk appetite, and this certainly is not showing me any at the moment. So that's bonds. Let's jump over to VIX World. And again, we'll try to make this quick because I'm not sure there'll be a ton to see here. It seems like the VIX is pretty happy right around 15 or so. And at least as it sits right now, it does have some active thrust to the downside, and I don't really see all that much that is much of an issue here. So this is going to bode slightly towards the bulls. Let's go to the VVIX next. If there's going to be a problem, I would imagine we're going to see it in the VVIX, and you can already see immediately how much the VVIX looks better than the VIX. So not much of an issue here. If they can get this thing sub 90, that would really be a big thing for the bulls. So right now, I would say that this is probably a coin toss. Maybe it's a Hail Mary shot for the bears, but I wouldn't overly put it in their camp. If the VVIX here gets under 90, then at that point, the bulls are fully dominant on that aspect as well. I'm going to skip the dollar for now because I haven't found any great correlations to what we're trying to do with what the dollar is doing. I found better correlations in terms of risk appetite with HYG, so I'm just going to pass on the dollar for now. I did tell you I was going to touch on Bitcoin in this video, and then we'll have a separate video just for that. So we do have a trade in the room together. We're trading some IBIT, which is the Bitcoin ETF. And I just want to look at this real quick, and I'm going to choose to look at it with the micro MBT, just because I don't have a ton of drawings on this thing, and it's a pretty clean chart. And so with MBT here, there is a squeeze that's building up. The squeeze is technically fired, and you have a clearly defined resistance zone up here where the red line, the red band is, and then above that, I think that can get you into about 115,000 roughly. The exact number, 114,000. So we'll see if that can happen. Bitcoin does trade over the weekend, so we'll see how this thing decides to open up on Monday. Huge volume day yesterday because of the rumors that Trump was going to sign some crypto. Well, folks were looking for the Bitcoin strategic reserve to be implemented. He didn't quite deliver on that, and I thought actually that there was a good opportunity for a rug pull because the market seemed disappointed that we didn't go with a Bitcoin strategic reserve bill. The bill still does advance crypto forward in the United States, so it was generally a positive. But my read on it is also that the market had ample reason to be disappointed yesterday, right? Expectations were very high, and although what he did was a positive, because expectations are so high, that's like the perfect opportunity to rug pull the thing and take it lower and flush the market. But we're not seeing that, right? We're seeing Bitcoin up today, another $2,600 or so. So I think that bodes well for the weekend, and that's going to be the biggest position I have going into next week is going to be the IBIT trade that I have on with you guys. So kind of superficially covering crypto here in this video, and then I'm going to show you another signal in the free video that ties all of this together. So if you're interested in the crypto stuff, join us for the next video. That one will also be on YouTube, and we'll talk about a pretty cool symbol that you can use on TradingView to look at what's going on with crypto, and I'll show you also the primary signal in that video that I'm using to guide the IBIT trade that we're in. All right, good folks. Well, that is my time. So the couple things that I would mention here is everything looks really, really well aligned. You do have long-term meaning going all the way back to COVID targets / resistance / supply, whatever you want to call it, from about 609 on SPY to about 612. So 609 to 612 is going to be a resistance zone. In many cases, I would say that that's where the market's basically going to top. It very well could, but I don't have a signal for that at the moment. I actually have signals that we can actually get through that level, driven by tech. Actually, potentially put in kind of a blow off top, maybe a melt up kind of thing, and then we'll have to make the next decision from there. So we'll see how that plays out. Again, next week, you're going to have a lot of catalysts. Earnings are also starting as well, but the big catalyst, as always, is going to be the Fed. So if the Fed comes out and is friendly, that basically sets the stage for that blow off top. I'm thinking about 7, potentially 8% in the QQQ as a way to play that in the event that Senor Powell gives the thumbs up. All right, guys, speaking of thumbs up, leave us a like if you're watching this on the YouTube. Leave us a comment. It helps us with the algorithm. And for those of you in the central room, I'll see you guys back in the room on Monday. Have a fantastic weekend, guys. Cheers.